Good evening, everyone. Time for another silver update. Now, this is the Dow 30 Industrial Average, and you can see that it's recently crossed over the 17,000 mark. That's coming from a low of 6,500. And although that appears to be an incredible move, it's actually small compared to some of the madness that we're going to look at in the other markets. Now, this PDF from More Research, this is the monthly NASDAQ 100 index, and you can see they're doing the exact same thing again that they did in the NASDAQ bubble. It's crazy the way people fall for the same things again, but they do. It's just a pattern that repeats throughout history. So I wanted to look at this one story and dig much deeper into this issue of stocks and the madness of crowds when it comes to the stock market. So this is the main article here. This is on Simon Black's Sovereign Man site, and it's also covered on Zero Hedge. And this is titled Top of the Market, Meet the $1 billion company that has zero revenue. So let's look at this a little bit here. July 7th, London. Editor's note, Tim Price is filling in for Simon Black. Lord Overstone said it best, no warning can save people determined to grow suddenly rich. Case in point, CYNK Technology Corp., a listed company that as of this morning has a market capitalization of $1 billion, in excess of $1 billion. Actually, we're going to see it today. It hit about $1.5 billion. According to official filings, the social media development company has one employee, no website, no revenue, no product, and no assets. What has effectively united this company with prudent investors is today's central banker. Andy Haldane, the chief economist for the Bank of England, conceded last week that ultra-accommodative monetary policy had, quote, aided and abetted risk-taking by investors. But to the central bank, it was worth using higher asset prices to stimulate the economy. Quote, that is how monetary policy is meant to work. That's why we did it. Central bankers, of course, will not be held accountable when the crash finally hits, even if the accumulated dry tinder of the boom was almost entirely of their own creation. Last week, the Bank for International Settlements, the central banker for central banks, issued an altogether more circumspect analysis of the world's current financial situation in their annual report. It concluded that with entirely welcome sense of caution against monetary policies, quote, diminished effectiveness and side effects. Translation, ZIRP, or zero interest rate policy, and in the case of the European Central Bank, which has taken rates negative, NERP, is no longer working if it ever did. Hyper-aggressive monetary policy has side effects. Getting out of this mess is not going to be easy, and it's going to be messy. Now, let's dig further into this CYNK company, because this to me is fascinating. Absolutely crazy what's going on. Let's look at this article that goes further into it. This is from hotstocked.com, and this was on July 2nd. A couple of weeks ago, CYNK Technology Corp. absolutely exploded onto the penny stock scene. Some people on Twitter started talking about the company, and as a result, investors traded more than $400,000 worth of shares in 6.5 hours. At the same time, the ticker jumped from its previous close of 6 cents a share and surged all the way to a mind-bending $2.25 a share. At that point, CYNK's market cap hovered around $660 million. And when we covered the violent climb, we mentioned that the company doesn't really have what it takes to justify that sort of valuation. We weren't the only ones sharing this opinion. A Seeking Alpha article appeared a few hours after our coverage, and its author, who disclosed a short position, also agreed that CYNK, with its $39 in total assets, doesn't deserve its market cap. Plenty of people expected to see the stock tumbling down to the sub-dollar levels, but surprisingly or not, it managed to hang on. What's more, on June 23rd, it jumped once again and added another 90% to its value. This was followed by a crash, but the significant dollar volumes meant that a lot of people were paying attention. That apparently was enough for yet another jump and yet another crash. On Monday, CYNK surged up the charts and gained a whopping 111%. It hit an all-time high of a mind-boggling $6.75 and finished the day at $6.25. Yesterday, however, it annihilated 51% of its value, which means that it currently stands at $3 per share. And he goes on. So let's look at this from Yahoo, and I've got the chart of the stock here, and you can see that it actually closed on July 7th at $4.95. So it was up $1.45 to up 41%. Okay, and here's what's so interesting about that. You can see that that brought it to a market cap of $1.44 billion. Now, I'm going to go back to the article and talk about what the company actually does. But this increase here, this 41% increase, is actually this $500 million that its market cap added just today. $500 million was added to the value of the company. Now, one thing that's interesting here is you can see the volume was 50,000 shares. Okay, so 50,000 shares at a price of $5 is $250,000 worth of stock on margin. 50%, that's $125,000. So $125,000 worth of buying added $500 million to the market cap of this company. That is the kind of insane market we're in right now. And again, this is a company that doesn't even have any business. We'll continue with this article. As you can see, the performance is absurdly inconsistent, and yet judged by the buzz around the social networks and discussion boards, some people believe that it's about to change. Is this really the case, though? We're about to find out. But while we're waiting, we might as well take a look at the company once more and see if anything has changed. The market cap has. Even after yesterday's crash, it stands at a ridiculous $1.2 billion. At the same time, CYNK's latest financial report is still the one covering the quarter ended March 31st, and it still says that the Belize-based company has $39 in total assets. On the bright side, their website is now working, which wasn't the case when we covered them previously. On June 27th, CYNK announced that their IntroBiz portal is now back up and running. It's been moved to a new server, which is better suited to cope with the expected traffic flow. This means that we can open the website and see what CYNK's business plan is. The homepage is full of pictures of celebrities, and when you click on each of them, CYNK invites you to buy contact information, more specifically, quote, emails and phone numbers to the artist's talent agent, publicist, and legal representative, etc. Considering the widespread use of Google Inc., NASDAQ's powerful search engine nowadays, this revenue generation plan seems a bit strange. But in any case, it might just work, and CYNK might just be able to show us something more significant in their future reports. Until that happens, careful research and consideration of all the risks, judging by the wild swings, there's a lot of them, is absolutely essential. So that's the coverage on hotstocks.com. Now, let's actually go over and look at the website. This is the website, IntroBiz. It's actually a different name, but you can see down at the bottom it does say copyright 2014 CYNK Technology Corp. So that is the company. And basically what they have is pictures of celebrities that you can click on. Apparently you can pay money to find out who their publicist is. That's about all I can find on it. The angels and investors is blank. The political is blank. Technology is blank. There's the entertainment, and then there's some business professionals. and the introduction. So that's it. It says about intro biz. Through our marketplace, you may both buy and sell the ability to socially connect to individuals such as celebrities, business owners, and talented IT professionals. There's the business plan. So why is that company worth $1.5 billion? Well, the reason why that company is worth $1.5 billion is because it's complete madness. And I want to take you to the very famous Charles Mackay book about the madness of crowds. Before I do that, I want to take you over to Proverbs, because this is fairly relevant to what we're talking about here. This is Proverbs 28, starting at verse 19. He that tilleth his land shall have plenty of bread, but he that followeth after vain persons shall have poverty enough. Verse 20, a faithful man shall abound with blessings, but he that maketh haste to be rich shall not be innocent. So that's what we're looking at. Now let's look at when it happened before. This is nothing new. This is Charles Mackay's Extraordinary Popular Delusions and the Madness of Crowds. This is the section on the South Sea Bubble, where he talked about what happened there. And he's talking about the schemes, much like this current scheme put forth, that really had no plausible reality at all. So let's read some of this. Some of these schemes were plausible enough, and had they been undertaken at a time when the public mind was unexcited, might have been pursued with advantage to all concerned, but they were established merely with the view of raising the shares in the market. The projectors took the first opportunity of a rise to sell out, and the next morning the scheme was at an end. Maitland, in his History of London, gravely informs us that one of the projects which received great encouragement was for the establishment of a company to make deal boards out of sawdust. This is no doubt intended as a joke, but there is abundance of evidence to shew that dozens of schemes, hardly a whit more reasonable, lived their little day, ruining hundreds ere they fell. One of them was for a wheel for perpetual motion, capital 1 million. Another was for encouraging the breed of horses in England and improving the glebe and church lands and repairing and rebuilding parsonages and vicarage houses. Why the clergy, who were so mainly interested in the latter clause, should have taken so much interest in the first is only to be explained on the supposition that the scheme was projected by a knot of the fox-hunting parsons once so common in England. The shares of this company were rapidly subscribed for. But the most absurd and preposterous of all, and which shewed more completely than any other the utter madness of the people, was one started by an unknown adventurer entitled, quote, a company for carrying on an undertaking of great advantage, but nobody to know what it is, unquote. Were not the fact stated by scores of credible witnesses, it would be impossible to believe that any person could have been duped by such a project. The man of genius who essayed this bold and successful inroad upon public credulity merely stated in his prospectus that the required capital was £500,000 in 5,000 shares of £100 each, deposit £2 per share. Each subscriber paying his deposit would be entitled to £100 per annum per share. How this immense profit was to be obtained, he did not condescend to inform them at the time, but promised that in a month full particulars should be duly announced, and a call made for the remaining £998 of the subscription. Next morning at 9 o'clock, this great man opened an office in Cornhill. Crowds of people beset his doors, and when he shut up at 3 o'clock, he found no less than 1,000 shares had been subscribed for and the deposits paid. He was thus in 5 hours the winner of £2,000. He was philosopher enough to be contented with his venture and set off the same evening for the continent. he was never heard of again. So there's an example from history. Nothing changes under the sun. There's nothing new. Same old racket going on now. We have a stock bubble that is just absolute insanity that's going on. And the thing is that this Dow chart doesn't even do it justice, because the actual bubble going on in the over-the-counter markets and the other markets is 5 to 10-fold the insanity that's going on here. So let's do the overlay of silver over this market, and you can see I'd been predicting for quite some time that silver was going to turn up and stocks were going to turn down, but it seems that the central bankers of the world are determined. I've said this many times before. They are determined to absolutely run this train off the tracks. They are going to print until the entire system explodes. And with these type of stock schemes that we're seeing now, where companies that have one employee and no assets and no prospects for even bringing in any future revenues are valued at $1.5 billion, you can see that we're reaching a peak in the madness. And we'll talk to you next time.